Good evening, students. Welcome to the live coaching classes organized by Board of Studies ICAI. We are going to start our next set of learning under Indirect Tax Laws, paper 8, which is to do with your customs and foreign trade policy. So, as routine students, whoever is listening to me and watching me live, please confirm you are able to see my screen. You are able to hear me, and also my presentation is visible. And just for your information, today's presentation, along with a Word document called MCQ, this has been shared to you on the Board of Studies website. So that will help you for discussing the problems in relation to today's class, right? So let me have quickly a couple of confirmation. Then we will start with our today's discussion. Thanks for the confirmation, Kaushiki. Yadida, thanks for the confirmation. So we'll start for today's discussion. As a topic as such, this paper called Customs and Foreign Trade Policy, many of you would have not come across in your internship because of the limited practice what we have in our CA practice. This has got a different ball game altogether. People who have experience under litigation, at least you would have seen a couple of cases where applications have been filed for duty drawback, which is connected with the refund of duty paid. Also, a couple of matters where if you have dealt with the EPCG license or advance authorization or duty-free import authorization, redemption of licenses, those are the cases where you would have exposure with this particular topic. Examination point of view, you're well aware, 20% of your total scoring is out of this customs area. So today's session, students, I'm going to take you through, make you understand overall view of this customs law, how this topic called customs has originated, why we have to study this, and how it is going to help for your area point of view. In the process, I'll take you through a couple of definitions, very important. Examination, please remember, you have this MCQ questions and also theory questions where this multiple choice, the small questions, short questions will be asked. And these multiple choice questions are more precisely with your definitions. So if you know the definitions very well, you can answer your MCQs perfectly. I'll make you to understand the process of levy under customs law. Like what is connected with this topic called levy of duty under customs law. Assessment of duty in the process of levy, I'll make you to understand what is the process involved in determining something called assessment of duty, how we will calculate the duty payable on imports or exports. There is something called remission, abatement, exemption, like when I touch upon the appropriate topic, when goods have reached Indian customs, in case if the goods are in a damaged condition, if the goods are not fit for consumption as it is, then there is a process called remission under GST law. Finally, I'll take you through a couple of important aspects connected with exemptions under GST law. Now, you would have heard a topic called interpretation of statutes. So this topic called exemptions under customs law has got this limited edition of the topic, which is connected with your exemptions. How exemption notification has to be read. From which aspect this exemption notification will be in the public domain. What is the authority for the government for cancellation of such exemption notification? All those aspects I'll be touching at the fag end of today's discussion. And take it from me, students. This topic as such, you have very, very limited people who practice in customs area for the limited exposure. But if you have flair for this particular subject, I would say that you have a very good, bright career to handle with the customs aspects. Before we get into the live subject, I'll take you through a couple of examples. These practical examples will make you to understand how we will read the concepts. And this today's learning, the 3 hours, what we are going to read, how we are going to get answers for some of the practical issues, what we are going to have. So first, to start with, I have taken this particular example. Mrs. PPC Limited have imported goods from Japan during March 2020. Due to operational issues, goods were not cleared from customs station. Rather, the same have been kept in the warehouse, bonded warehouse. The rate of duty applicable during March 20 is 12%. And in the month of June 2020, the above goods were cleared for home consumption. At that point in time, when it was cleared for home consumption, the rate of duty is 18%. Examine the point in time when the duty has to be paid. So here, this example, I've touched upon a particular topic called bonded warehouse, or in simple language, I have used a language called warehouse. Warehouse is a mechanism. It is a permission as such, where the goods which are imported into India, I have a mechanism where I go to the customs officer, file an application called bill of entry, get the material cleared for domestic consumption. Or at times, if I don't need the material right away, I don't have sufficient space in my factory, I can very well stock these goods in a place called warehouse. So this is a mechanism they were referring to. So what happened the day when this metal had reached the customs station or customs premises for the first time, the rate of tax happens to be 12%, the duty. But I have kept this particular goods in a warehouse and I made the clearance during the period June 2020. At this point in time, and when I have cleared material from customs bonded warehouse, the rate of tax happens to be 18%. So in this process, they've asked us examine what is the rate applicable for the duty to be payable. So is it 12%? Is it 18%? So today's topic, end of our 3 hours discussion, you'll get an answer for this particular provision. How do we examine the date relevant for payment of customs duty? Point number 2, example B. A consignment worth 30 lakhs has reached the Chennai port during January 2020. Mrs. ABC Limited is the assessee in whose name the aidway bill is prepared before it reaches the customs port. Now, this document called aidway bill, this is a document which gives the authenticity for the person who can claim the goods. Like when we go to the customs for getting the material, the goods cleared from the customs station, the person whose name is appearing on the aidway bill is a person, custodian, who has to pay the relevant duties and fulfill the formalities and get the material clear. Now, in this case, the assessee have noticed that the above goods have reached the Indian customs with a considerable delay. So here, this assessee says that there was a considerable delay beyond 3 months, of scheduled date. Examine the obligation of and responsibility of if the above consignment is not cleared by the assessee. Now here, we would have seen provisions in the commercial terms where we have something called in-core terms, INCO, in-core terms. So in case of this foreign trade, import and export, like we have the domestic CAF or ex-works, we have various terms under customs law also. So here, for a moment, this consignment has reached during January, and this assessee, Mrs. ABC Limited, this person is not willing to get the consignment clear. Now, question comes here, what will happen to the customs duty payable? Will the customs authorities keep quiet if ABC Limited says that, no, I don't want to take this consignment, I want to leave as it is at the customs dock? Or is there a mechanism where he can abandon, he can waive off his legal right to these goods? This is one another provision which is connected with Levy, which I'm going to explain in today's session, right? So there is a mechanism called abandoning the goods. So what are the rights available to a particular importer in relation to consignment. Next, third example. Please keep in mind, these examples, I'm going to set the note for you to understand these concepts. Like, I'm giving the practical examples to make you understand more connected with the concepts. Third example, Mr. A has imported a consignment of steel scrap during November 2019, wherein the government has prescribed customs duty at the rate of 5%. At the rate of 5%. On what? On such scrap instead of regular rate of 18%. Now, they have cleared a consignment called scrap. Now, considering the competitive price and beneficial interest on such scrap sold in the domestic market, he placed an order for 2 consignments during December 2019. Government, having identified lacuna on the exemption notification, have withdrawn such notification on the day the above 2 consignments have reached Indian territorial waters, examining the right casted upon the assessee to challenge such an act of central government. Now, this is one of the trade practice which will be examined on the basis of the rate of duty applicable. Rate of duty applicable. Now, I was referring in this problem somewhere saying that the rate of tax in the domestic market, when I say regular market, this is your Indian market. In India, the rate of tax per scrap is assuming to be 18%. Now, I refer this as say GST. So, under GST law, the rate of tax is applicable for 18%. Some reason, customs authorities have not examined these provisions, and customs duty was paid at the rate of, say, 5%. At the rate of 5%. Now, isn't it a loophole available for the assessee? Answer is a big yes. The assessee has explored the leakage or the drafting issue in the customs notification. Because the rate of tax was mentioned as 5%, this scrap, which is generally available 18% in India, which is available for 5% if it is imported. So what he has done, he started importing in bulk so that he can save and become price competitive to deal with the market. But unfortunately, when this material have reached the Indian territorial waters, when it has reached the Indian territorial waters, that point in time, the government has realized that there was some issue with respect to the rate notification. Then they made the amendment. Now, in this case, Mr. A, can he challenge this particular rate notification saying that this was changed without, it was made effective, maybe say retrospective, or maybe 1 or 2 days prior to this particular consignment which has hit to the customs water, whether the assessee can plead before the court of law. Even this, I'm going to take you through when we discuss on something called Section 25, which deals with your exemption notifications. So this is one another very good example which is relevant for our today's discussion. And this is my favorite slide where I'm going to make you understand how we have to look at the customs law. So let's read this particular example. Mr. Y, a professional chartered accountant, has been appointed by a manufacturing company towards examining their business operations and provide consultation on some of the below operational aspects. Point number 1, possibility to reduce working capital exposure on account of customs duty. Working capital exposure on account of customs duty. Point number 2, deferring the payment of customs duty till the orders are received by the customers for import consignments. So here, they don't want to pay customs duty the moment material have hit to the customs station. They want to defer, they want to hold this payment of duty to some other point in time. Third point, exposure of duty on goods re-imported for deficiency in performance. Re-imported. Now, this is one of the practical issue we will come across in most of the cases. I'll give an example for you to understand this provision. Say, for a moment, Sony Limited has manufactured a particular television. The particular television has been exported out of India. Once the customer received the material, this particular goods, they felt that there was a deficiency, there was a lacuna or some performance issue in this particular material. So that particular customer is saying, look, I'm going to send back this particular consignment. Now, what happens? If, when I say re-import, exported during a particular point in time, this material was re-imported for repair-related activity. The moment it is going to hit customs water or customs station, does the manufacturer need to pay customs duty once again? Now, this is the most practical issue many of the businesses have. So we have something called rules where you have a concession rate of duty, and there is exemption notification under Section 25, which deals with this mechanism. What circumstances we can get the goods back into India, and what is the time limit within which we have to address to. Last but not the least, eligibility of duty drawback and encashment of GST accumulated on purchases. Now, this particular aspect, in the process of giving a guidance, there is something called duty drawback. Duty drawback refers to a refund mechanism under customs law. Refund under customs law. Most of us doesn't know the customs provisions, and we pay customs duty every time material was imported back into India. Now, I was giving example of this re-import case. Now, assume for a moment, I've exported consignment worth 10 lakhs. Customer raised a complaint that there was a malfunction in this particular goods. If I bring back to India, which is called as an import, now on import, on rupees 10 lakhs, if I have to pay customs duty, now this is going to be a burden on the manufacturer or the importer. So for that, today's session, I'm going to explain the provisions under Section 25, how these exemption notifications are going to deal with. Please keep in mind, students, before we start with the technical aspects, I'm just touching the tip of the iceberg. That means you have multiple customs provisions where, because of the lack of exposure, we never advise the clients in a proper manner. And imagine for a moment, you get into practice of indirect taxation along with customs. You are going to have a promising career from day one. So with this backdrop, let's start with our today's learning. Basic aspects of customs. Now, when I say customs, as the name customs go, this has got a practice. This has got a belief. Like, no, customs is nothing but what we believe. Custom, as an English general name, we believe. Similar to that, we have this customs, which started way back. Maybe I would say right from before Britishers, even Arthasastra. When we have this Kautilya's Arthasastra, even there was a reference to this term called customs as shulka. This shulka is a tax which is paid or duty which is paid, not in the rigid form as we have today. Like for a moment, if I import any consignment which is falling under a tariff heading 35, the rate of tax is 12%. Nothing like that. In those olden days, we used to have this customs like I pay out of gratitude. Say for a moment, like say people who have visited to India as a guest for purpose of trade. These Mughals, when they have visited India. Now, when they meet the local Rajas, they used to offer some offerings as to please the Raja. Why? My dear king, I have come to your territory for doing this particular trade. In return, I wanted to give you something called offering, which is technically called as shulka, right? So this term customs is something which was there since ancestral days, which has come into existence in a refined form called Taxation Customs Act as on today, right? Shivam is asking this question. Last class, I was unable to communicate to you all. Shivam, I can see all your questions, whatever you're posting to me. Any questions which are there in the previous session which were not answered, you can feel free to post it back to today's session. And students who are listening to me, don't restrict your questions. Whatever under indirect taxation, could be GST, could be customs, you can feel free to ask the questions. Mansa is asking why customs duty not yet subsumed into GST law. I'll come to that point, Mansa. You'll understand in a while. In a couple of minutes, I'm going to make a clarity on that. Now, when I touch on the next slide, Mansa, you'll get more clarity on this particular question of your thing. So this customs law, what I was referring to you, this was their ages together. However, we see as on today, much refined form. So what we see today, one is Customs Act 1962. Customs Act 1962. This deals with your procedural aspects. Customs Act 1962. Please make a note in your working note. Customs Act 1962. Write down in your working note. Customs Act 1962 hyphen procedural law hyphen procedural law. Below that, write down this Customs Tariff Act 1975. Customs Tariff Act 1975. Hyphen rate identification. Hyphen rate identification. As on today, students, under Customs Tariff Act, we have Schedule 1, Schedule 2. Please make a note in your working note. Customs Tariff Act. Below that, you can make a chart like this. Schedule 1, rate for imports. Schedule 2, rate for exports. Schedule 2, rate for exports. Clear? Customs Act is clear, and Customs Tariff Act is also clear, right? Now, let me move a little further. Mancha, you can wait for another 2 minutes. I'll give a clarity to your point. Now, we had earlier various laws right from British era. This Indian Sea Customs Act, Inland Bonded Warehouse Act, Land Customs Act. All these provisions were subsumed. All these were subsumed in your Customs Act 1962. Customs Act 1962. When I say procedural, with respect to registration, with respect to taking permission, with respect to identifying the date from when a particular provision is applicable, identifying the officer under whose jurisdiction this particular customs aspect are dealt with. All these are the aspects dealt with your Customs Act 1962. Unless I specify Customs Tariff Act, please understand we are talking about Customs Act 1962. So whenever I refer, say Section 22, Section 12, all these are the provisions which are dealt with your Customs Act 1962. Students, hope this is clear for understanding which act we are referring to. Clear? Now, Mansa, you have your answer in this line. Before I explain, I'll give you the background. Rightly, this question was asked by Mansa. Why we have separate law for GST? Why we have separate law for Customs Act? Now, please understand there is something called Schedule 7 of Constitution. This Schedule 7 has got List 1, List 2, List 3. List 1, which has got power vested with the Parliament. List 2, it is with respect to the legislature of a state. Legislature of a state. And List 3, we call this as a concurrent list. Now, this customs law is covered under List 1. I repeat, customs law is covered under List 1. Now, what happens, Mansa, when we have this particular provision, where already my customs law is covered. Already my customs law is covered. I need not have a separate duty once again for that particular aspect, right? So here we have list number 83, serial number 83. Under this serial number 83, my customs, duty with respect to import of goods, export of goods is covered under this particular list number 1. Now, when we talk about GST law, please remember Article 246A. Article 246A talks with your levy of GST. Levy of GST. Now, please keep in mind, this is a concurrent levy. This is a concurrent levy. And this customs is only with respect to central government. Only with respect to central government. Now, for a moment, please understand this example. Then you have a clarity why we have customs law separate, we have GST law separate. Say, Hindustan Unilever have manufactured their products. When Hindustan Unilever have to sell their goods, now we know that there is a levy of GST on the goods which are supplied from one state to another state or within the state. So when there is a trade which happens, within India, I would put it this way. This is cross-border and there is something called domestic. When the trade happens within India, Mansha, we have this GST which gets triggered. And when the trade happens with respect to cross-border, please keep in mind, students, none of the states have authority. None of the states have authority with respect to levy of tax or duty on this particular cross-border transactions. Like, for a moment, let us assume that Hindustan Unilever imports a particular machinery from America. And for a moment, if Hindustan Unilever is registered in the state of Maharashtra. Now, Maharashtra state government says, I want to levy this particular customs duty. Now, actually, this is an import-export, which is nothing to do with your domestic trade. So, to keep a difference, to bifurcate this particular trade-related aspects, all my imports and exports has been dealt separately under customs law. All the trade which is happening within India, within the domestic area, that is dealt separately under GST. So as on today, Mansa, we have this entry number 83 under list 1, which is dealt with customs duty, which is only to the exclusive zone of central government. And with respect to Article 246E, this is under the jurisdiction. Of your state and center. So these are the reasons why we have the provisions connected with my customs law dealt separately under list 1. My GST law dealt separately with respect to the domestic trade. Hope this explanation is clear, Mansa. Probably next, I'll use a fresh slide so that this will be easy for you to remember. And any questions, technical, non-technical, feel free to post it back in the query window. Yeah. So Article 245, this Article 245 gives a power for enacting the laws made by a parliament and the state of legislature of a state. So as on today, we have this Article 246, which has got power vested with both central and state with respect to GST law. Now, this Article 245 has given a extraterritorial power where it says no law made by a parliament shall be deemed to be invalid on the ground that it would have extraterritorial operation. Like if the goods are manufactured in India, if the goods are leaving out of India. Now, we cannot question this levy under Schedule 2 of your Customs Tariff Act. So when I'm exporting, say, minerals, for a moment, I'm exporting wheat to, say, Japan or Europe. Why is that you are levying a customs duty on exports? Now, this is a law framed by the parliament, which cannot be questioned because it is going to have an extraterritorial jurisdiction. I've explained this list 1, list 2, list 3. These are the main reasons why we have customs law marked separately with respect to GST law. Okay. Kaushik is clear. Mansa says, understand in GST law, it's given tax paid by taxable person within taxable territory. Yeah, correct. Moving further. Now, this is one particular definition called assessment. Entire my section 12, which deals with the charging section, is connected with one definition called assessment. Please open your working note. Please open your working note. Write down the heading called assessment. No need to copy. No need to copy. Only important points I'm going to tell you. Please make a note of those important points. Students, what happens when you go for your examination, this running notes, whatever you're going to have, the moment you look at this term called assessment, you will immediately recap what points you have to write in your examination. Clear? Now put the heading section 2, clause 2, assessment. Under that, you can write down determination of dutiability. Determination of dutiability on any goods. On any goods. Hyphen. Determination of duty on any goods. Hyphen. Import or export. Import or export. Hyphen. Hyphen. Duty plus tax plus cess. Duty plus tax plus cess. Duty plus tax plus cess. Below that, write down Customs Tariff Act 1975. You can use the abbreviation CTA for shortening your answer. Customs Tariff Act 1975. You can write CTA. Below that, write down classification. Below that, write down classification. Below that, value. Below that, value of the goods. Value of the goods. Next bullet point. Next bullet point. Exemption. Next bullet point. Exemption. Next bullet point. Exemption. Now, these points, whatever you have written, I'll explain in detail how you need to understand this assessment. Generally, when we look at assessment, be it income tax, be it your indirect taxation. When I say assessment, it could be self-assessment, provisional assessment, right? Or your best judgment assessment. Now, assessment is a process where we try to examine what is the tax or what is the duty which needs to be paid. Now, here under customs law, whenever I refer to the term assessment, there is a term called dutiability. There is a term called dutiability. That means to say, first and foremost, we need to understand whether or not these goods are subjected to duty. Whether or not these goods are subjected to duty. That means the moment the goods are there before the customs officer, are those goods dutiable is a question which needs to be answered. Now, when I have to answer this, I'll give a couple of examples for you to clearly understand this. For a moment, say there is a vessel which is coming from Europe to say, it is carrying goods to India. It has first touched the Indian customs water. Say in the, like right from south, it is traveling to, say, north. It has landed up in, say, Kerala. From Kerala, it took a turn, went into Chennai. From Chennai, it went into Vizag. From Vizag, it has touched to Mumbai. From Mumbai, it has gone to further extreme. Now, if you imagine the vessel which is moving, please understand that this vessel is not going to contain or carry the goods only meant for India. It is going to carry the goods which are meant for customers other than the destination in India. So here, when I say dutiability, first and foremost, are those goods subject to duty, customs duty? If it is not meant for import, if the goods are not meant for import, why should I pay customs duty? So this is the point comes here. Not just because the goods have landed up in Indian customs water or in the customs station, it doesn't mean that duty gets attracted. So here I have to ascertain whether these goods are dutiable of any goods and the amount of duty. Amount of duty. Now, when I say amount of duty, I made you to write duty plus tax plus cess. Let me see if there is, okay, there is one slide where I've explained in a diagrammatic manner why this duty, tax and cess is referred. We will hold this language. As of now, whenever we talk about customs duty, this includes duty plus tax leviable under any other law for timing in force plus cess. Please keep in mind, duty, that is the customs duty, tax leviable under any other law for timing in force, and cess. If you ask questions of why tax is referred, why cess is referred, please wait for another 10 minutes. I'll give you a clarity why we are referring to duty plus tax plus cess. Clear? So this assessment includes finding first and foremost determination of dutiability of any goods on which the amount of duty, tax or cess or any other sum payable. Now, how do I get to know, sir, that these goods are dutiable? Now, if it is meant for import, definitely it is dutiable. Chalo, I got to know that these goods are dutiable. So from where do I get the rate of duty? For that, I refer to something called Customs Tariff Act. So with respect to imports, which schedule I have to see? Schedule 1 or Schedule 2? Schedule number 1. With respect to exports, Schedule number 2. So I refer to Customs Tariff Act to find out what is the rate of tax applicable. So how do I find the rate of tax? Please remember, Central Excise, the Customs Tariff Act, where you have this HSN, Harmonized System of Nomenclature. On the basis of HSN, based on the chapter 82, chapter 32, chapter 35, I refer to the respective chapter, see what is the rate of customs duty prescribed over there. That's how I get to know my rate of tax. Then moving on, point number 1, classification. So first aspect, I'll see what is your HSN. What is your HSN? This HSN is going to give me what is the classification where I have to look my rate of tax in my Customs Tariff Act. So if someone give you this Customs Tariff Act, this is a thickness of the book. You cannot search entire book for finding the rate of tax. What is the basis you find? You will find on the basis of classification. Like for instance, if you have imported a radio, which is an electronic goods, if you have imported a watch, which is a device which is other than electronic goods, if you have imported something called torchlight, which is again other than electronic goods. Now, based on the nomenclature, you will say these are the goods which have been imported. Now, I've used an example called watch, radio, and torchlight. Now, what if these three are combined in a handset called mobile? So when I have imported a mobile has got a radio, it has got a watch, it has got a torchlight, it also has got a features for exchanging communication. Now, there comes your classification. So where you will look into the Customs Tariff Act. Now, this classification is an area where you can practice for giving a advice, where you will examine the nomenclature, you examine the purpose, examine what is the goods which are imported. The next class which we are going to deal, I'll explain in detail how this classification is going to help you. But take it from me, once you get into practice, this is one area where a lot of scope is there to help the assessor to find out what is the rate of tax payable on the goods which are being imported. Very, very good opportunity from your practice point of view. Moving to the next point, value of such goods. Now, we should know, like we have section 15 under GST law, section 15 under GST law, what we call as assessable value. We should know the tariff value or the value on which I have to pay my customs duty. So for that purpose, now this again, I'm going to deal separately under valuation. I have a third class where I will explain you in detail the importance of this topic called valuation under customs law. So here, what I have to do, first find out whether dutiable, find out what is the tax or cess applicable, find out what is the classification. Based on the classification, Go to your customs tariff act, maybe schedule 1 or schedule 2, find out what is the value, apply the rate of this on this value. Now, should I need to pay tax? Don't jump to pay tax. Look for something called section 25, where whether or not there is an exemption or concessional rate of duty. Concessional rate of duty. So where do I have concession? Take example, say ISRO. Any goods which are imported by ISRO, they have a preferential rate of duty, where assuming 7.5 is the customs duty, ISRO will pay just 2.5%. So there are few exemption notifications where I have absolute exemption or conditional. Absolute or conditional. So please examine what is the goods, what is the classification, on the basis of classification, what is the rate of tax, on the basis of tax, what is the value, and whether or not I have any notification which comes and rescues that no need to pay any tax on this particular value. Again, all this is part of my exemption notification. Now, for a moment, there's something called notification 138 where there is a concessional rate. Now, when I import, for a moment, assuming that there is a notification 78 of customs where it says you have a concession rate of say 5% ad valorem, 5% ad valorem when you have satisfied some of the conditions. So when I file my bill of entry, there I'll see the regular rate of tax is 7.5%, but because of this notification, I'm just going to pay 5%. Reference to this notification in my application for bill of entry is mandatory. Next, moving on. Please write down in your working note. You have written in till your exemption notification. Continuation to that, write down reference to quantity, comma, weight, comma, volume or measurement. Reference to quantity, weight, volume, comma, or measurement. Next bullet point. Origin of goods. Origin of goods hyphen import. Origin of goods hyphen import. Origin of goods hyphen import. Next bullet point. Specific factor. Next bullet point. Specific factor. Yeah. Now, I'll explain each of these points, which is also part of your assessment. Now, when I talk about your quantity, weight, volume, measurement, etc., in the process of assessment, please keep in mind, I'll give example. Say, I don't know how many of you have seen the bills issued by ITC. As you commonly know, the cigars or the tobacco products. In case of tobacco products, based on length, the duty is payable based on the length of the cigarette. If you look at the rate of notification on the basis of length, the rate of excise duty and also the customs duty is determined. Similarly, in case of your pan masala, tobacco products, on the basis of the grams, whatever the tobacco content is there, the weightage, I levy my duty. So here you have to know, is my goods subject to duty on the basis of the unique unit of measurement or in general? Unit of measurement, generally there is a separate schedule where we call that as Schedule 4, which deals with your tobacco products and this precisely tobacco, and one more item is there which are dealt with on the basis of this measurement, right? So this is one of the parameter where my assessment comes into picture. Next point is your origin of goods. There is something called anti-dumping duty. Very classic example. During COVID time, many of the goods which are imported from either China or Malaysia, the goods have been subjected to higher rate of duty. Higher rate of duty. Now, again, in the next class, what we are going to have, I'll explain in detail what all duties are there under customs law. And one of them is your anti-dumping duty. When I say origin of goods, now I should know from which country the goods are coming in, whether this is going to determine the duty in addition to the normal duty, what I'm going to pay. So one of them is your anti-dumping duty. So this is one another factor which helps me to do the assessment what duty I have to pay. Last, I have written something called specific factor. Specific factor. I'll give an example. Say there is a order which deals with your ethyl alcohol. Ethyl alcohol. What is the specialty of ethyl alcohol? It is an alcohol, normal alcohol, which could be used for human consumption or which could be used for industrial consumption. Now, I could have an alcohol if not denatured, if not mixed with chemicals, it is used for human consumption. If I use the chemicals in the presence of a customs officer, my rate of tax, rate of duty is completely different. For an instance, for a moment, you would have heard this company called 3-in-1 Cycle Agarbatti. This Agarbatti, I don't know how many of you have read this case law. If time permits, please read this particular branding and the way 3-in-1 Cycle Agarbatti. There is a cycle logo which is which is having its origin from Karnataka. This particular 3-in-1 brand Agarbatti, they use perfumes. They use incendic, this incendic sticks. When we lignite these sticks, it gives a perfume. Perfume smell which comes, which is completely different. When you read this history, how they have started the business. This gentleman used to take his perfume sticks, just go to the business market. He used to ignite the stick, leave it in a shop, and walk out. The incendiary stick is so good in order where people were looking for buying that particular incendiary stick, and they have a chemical formula which is a combination of various chemicals. So when you ignite one agarbatti stick, it gives 2-3 perfumes combination, maybe jasmine, rose, etc. Now, how do I get this particular perfume? I mix various chemicals together. So in the process of this manufacture, if I import an alcohol, which is one of the industrial consumable item, now the question comes here: is it for human consumption? Is it for industrial use? So how do I know? So I don't know that this is the usage, but I give it to officer. My dear officer, please mix the chemicals so that this is unfit for human consumption. That means once I add chemicals to this alcohol, it becomes invariably no way can be consumed by human. So that point in time, the specific factor which will help me to determine, is it a chemical for industrial purpose? Is it an alcohol which is meant for human consumption? So this is one another factor. Business to business, it will help me to understand how I have to determine my duty. As I say, provisional assessment. I have gone to the customs commissioner saying that this is my nature of business. I have imported goods from Japan. I am not in a position to determine what is the duty payable. I file an application called provisional assessment. Self-assessment, where I, as an importer, I declare this is my HSN number, this is my classification, this is a usage, this is a stage of origin, and there is no special order required. There is no special factors required. That's called self-assessment. Reassessment, where in spite of paying the duty, the customs officer, he himself carries on a process called verification of your assessment. That is called reassessment. All these are the part of definition called assessment. So this one definition, I have spent more than 10 minutes. For the simple reason, examination, please expect a theory question for 4 marks. Examination, the moment you look at your running notes, this key terminology, you should be in a position to explain in detail for 4 marks. Moving on further, bill of entry. Bill of entry, it is a application. It is a application under 47, section 47, where a bill of entry is referred to section 46, entry for goods on importation. Let me see if there are any questions. Shivam Gandhi is asking this question. Article 245 of the Constitution was challenged in the case of Mohit Minerals, where RCM was also levied, basic custom duty was also levied on ocean freight in CAF basis, because state cannot levy tax on such cross-border transactions. Good that you brought this question, Shiva. I really appreciate your following of case laws under GST law. Shivam is asking this question. There's one entity called Mohit Minerals where the assessee has denied to pay tax on reverse charge. I'll give you the background, Shivam. It's not completely the Article 245 and no authority under customs duty. I'll give you the background why Mohit Minerals has come into picture. For a moment, let us assume that there is a manufacturer by name Shivam. This Shivam is having their operations stay in the state of Rajasthan. So Shivam has imported his raw material, say from Japan. So when he has imported raw material, this comes by, say, by a vessel. So when the goods have come to the bonded customs station, Shivam filed his bill of entry. When he filed his bill of entry, he has to declare something called value. Now, valuation, I'm going to deal in the third session, but I'll touch in a lighter fashion for understanding. So Shivam says, I have to pay 1 lakh USD for the supplier. My freight is, say, 20%. My insurance is, say, 2%. Now, he's going to declare the facts that value, insurance, freight. Now, freight, please understand, this is by vessel. So, right from the seller in Japan till the customs station in India, whatever the sea freight is there, that is a value which is offered for valuation under customs law. So what did Shivam has done? He paid customs duty under section 12 of Customs Act. Now when Shivam has paid customs duty, please keep in mind 1 lakh USD plus freight plus insurance. All these three were subjected to customs duty, GST, that is IGST, and also cess if applicable. Now the goods have come to the factory of Shivam. He has used it in manufacture and he was paying the tax on the supply. Some point in time, the department has given a rate notification, the notification under 5 of 2017 IGST law, where they say, look, I impose a tax under section 5, subsection 3 under IGST law, where you have to pay tax under reverse charge mechanism for the freight in relation to the sea, right from the place of exporter, that is in Japan, till the customs port, whatever freight, for a moment, let's assume $20,000 is the freight charges. The customs notification said that, the IGST notification said that on this 20,000, again, you have to pay tax under reverse charge called IGST. Now, that's the point in time where this gentleman called Shivam, this Mohit Minerals, have said that, look, you're going to demand the duty under Article 246 twice. One, under customs law, when I have paid my customs duty. Second, under GST law, by way of this notification 5 of section 5.3, notification 10 of 2017, where you are asking me to pay to IGST on this 20,000 USD on reverse charge basis. So he said that when I paid customs duty, I've offered this 20,000 for valuation purpose. I paid basic customs duty, I paid IGST, I paid compensation cess if applicable. Addition to this, again you have brought a GST law. Again under GST law, you're asking me to pay the same IGST. So this particular matter went into Supreme Court, and Supreme Court said that yes, the same transaction cannot be subjected to tax twice. Article 246, there is no authority to levy tax twice by the same authority concerned. By virtue of that, this particular levy was squashed. So this is a backdrop, Shiva, where they say not 245, reference 246, where they say that twice I cannot levy a duty or tax on the same transaction. And students, in the process of your articleship, please look into these practical examples and try to evaluate why I have to pay the duty, why I have to pay the tax, right? Mansa is asking this question: is it basic customs duty or general duty? Whenever I refer to the duty, Mansa, it is basic customs duty. And she's asking this question: is there any council for Customs Act? There is no council. GST Council is a special body formulated only for GST purpose, and for the customs purpose, the Parliament is going to take decisions. And backdrop, if you are thinking this way, who is the person who is going to think with respect to administration, with respect to duty and other things? The GST Council for GST matters, the Parliamentary Affairs, that is the Finance Ministry, who is going to work for Customs Act. Then Mansi is asking this question: is the duty impacted by multilateral agreements? Duty is not impacted by multilateral agreements. Ma? Income tax, you may have that exposure by virtue of Section 9 when you look at the treaty between each nation. But with respect to the customs law, the notification says, look at the origin from which nation the goods are coming from. Kaushik is referring to sanitizer, LUT, FOB. What is this sanitizer, Kaushik? I didn't understood this terms LUT, FOB, and sanitizer. Now, bill of entry, this is an application which is referred in 46, read with section 47, which is nothing but a intimation to the officer saying that I wanted to clear the goods from customs area. Now, what is a customs area? Very important. Most of the times we don't understand. Customs area means area of customs station or warehouse. Customs station or warehouse. Right now, customs area hyphen customs station slash warehouse. Customs station slash warehouse. That means now this is the area where I have this imported goods or exported goods, which are ordinarily kept. Now, that means to say that entry to this area, exit from this area is not free. Entry to this area, exit from that area is not free. It's a restricted area. Like when you visit to, I don't know how many of you have gone to the customs for assessment purpose. The moment you enter the customs for assessment, appeals, etc., the same. No, customs station starts from here. That means any goods which are coming into that area, you have a coastal, that guard, security guard, you have to make a declaration. I have come for so-and-so purpose. These are the goods I'm carrying. These are meant for my personal purpose. Like when we go for the customs area for survey purpose, like assuming we are carrying a laptop, we have to give a declaration that these are the goods which are meant for my personal consumption, which is not dutiable goods. I give a declaration and then I come out. Dutiable goods, I have explained in detail in the assessment. Duty refers to the Customs Tariff Act, also Customs Act. Entry in relation to goods means entry made in the bill of entry, shipping bill, or bill of export. Bill of entry, point number 1, which is in relation to imports. Shipping bill, which is in relation to exports. Bill of export is also in relation to exports. Common, I can replace shipping bill with bill of export. Interchangeable terminology. So I use the term bill of entry in case of imports, shipping bill of export in relation to exports. Import in GST law, whatever definition we have read, same definition. Import refers to, it's with its grammatical variations and cognate expressions, bringing goods into India from a place outside India. What is India? India includes territorial waters. What is territorial waters? Territorial waters, the waters extended up to 12 nautical miles from the sea line. Imaginary, it's an imaginary line. Wherever the sea soil, when you walk to the seashores, the place where from the seabed, where you can, you are standing. When you walk into the sea, at a point in time, you lose a foothold that you're not standing on a soil, rather you are in a semi-soil, semi-water stage. So right from there, 12 nautical miles is your territorial waters. So when you talk about India, India includes territorial waters. Tariff value, reference to your customs tariff act. Warehouse, warehouse refers to a place where I store my goods for temporary purpose. Now, I have something called public warehouse, then private warehouse, which is licensed, which is given a permission under section 57 or 58. Now, I'll give you a little backdrop about this warehouse, why it is important, how it is important, and where we use this particular concept. Like one of the example, for a moment, let's assume that Shivam is into assembly of the DG set. When I say assembly of DG set, say there is a engine, there is an alternator, there is an acoustic. There are three components. What he will do, engine comes from USA, alternator comes from say Ukraine, and this acoustic is coming from say nearby Singapore. Now these three components come to India. Instead of me importing to my factory, say in Maharashtra, I say that, sir, I take these goods, I don't want to take to my factory, I'll put it to a warehouse. When I put into warehouse, I'm just deferring my customs duty. So what Shivam does, he goes to the customs warehouse, he opens the boxes, he opens the engine, he opens the acoustic, opens the alternator. Engine and alternator, they need to be connected using wire and cable. So he just carries a small wires and the clips with him. He just connects the alternator with the engine, and then he puts the acoustic on that, where a DG set gets assembled. So he just assembles them and sends it back to USA. Now this is called manufacturing activity in a warehouse. Now what is the advantage of this? I, as an importer, I need not pay customs duty. If I clear to the domestic tariff area, I have to pay customs duty. So here, I'm taking into a bonded warehouse. From there, I'm doing a temporary activity and I'm sending it out of India. That's the purpose of my warehouse. Now, starting with section 12, levy and exemptions. Levy. Levy is a point in time. Levy is a mechanism where I declare that these goods are liable for duty, liable for customs, liable for taxation. So levy is upon where a declaration, identification is done that the duty is applicable. Then once I know that there is a levy, I move to the next aspect called assessment, where I'll do the assessment. For these goods where customs law is applicable, whether I have to pay any customs duty. If I have to pay, how I assess the duty payable on those goods. Collection of tax or duty. This is a point where I refer to section 15. If you remember example C, example A, where I said I have imported the goods at one point in time, I have put into warehouse. After a point in time, I have cleared the goods. So determining the time when I have to pay my customs duty. So these are the three elements generally we have to keep in mind. What is a levy? If levy is triggered, whether what is the assessment or what is the tax I have to pay. Finally, what point in time I have to pay the customs duty. Now, this is one example. Mansa and Shiva, this is going to help you for better understanding of these provisions, what we have been discussing all along. Before this, just let me see if there are any questions so far. Kaushiki was referring to sanitizer. Perfect example. Yeah. I recollect this instance. Kaushik was saying that sanitizer was used as an alternate to alcohol. During COVID, we have seen many instances where people were consuming the sanitizer in a belief that this is an alcoholic extract and it has got so much of power to replace your alcohol. And very classic example. As an industrial manufacturer, if I have imported the chemicals, was it alcohol? Was this a chemical? This is a point of determination for my duty. I completely agree with you, Kaushiki. Mansa is asking this question. So please suggest as a platform where we can find all case laws with related to customs law. Mansa, we have this. If you want to have a free customs reference, there's a website called Indian Kanun website, indiankanun.org. India Kanun, INDIA, India Kanun, indiakanun.org, where you can find these case laws. Also, if you can afford, if you subscribe to these websites like Tax India Online, Tax Management India, Tax Guru, there you have a repository under indirect taxation, under customs law, all the case laws of various high courts and Supreme Court. You will get the list of case laws date-wise. Then you have this, what you call this CBIC website, but little difficult to find out. But you can do subscription to Tax India Online or Tax Management. You can find a list of case laws in a date chronology for your reference purpose. Now, this slide, I wanted to bring you to your knowledge. If you remember my definition called assessment, please look at your definition. Assessment, you have written duty plus tax plus cess. The reason why I have paid duty, customs duty, I have paid tax under any other laws, and also cess. This slide is going to give you a clarity for that example. For a moment, let's assume that there is a buyer called Kaushiki. Kaushiki is interested to buy her long-lasting wish of this car. So this is one of the treasury, which is a good old 1940s vehicle. So Kaushiki wants to purchase this vehicle. The cost of this vehicle, say in the Indian market, is 10 lakhs. And when she wanted to buy, the seller says, look, you have to pay 28% the GST, and also compensation is of 12%. So effectively, 40% is going to be the rate of tax. At that point in time, there's a gentleman called Mr. Shivam. Shivam comes to Kaushiki and says, look, instead of you paying this tax of 28 plus 12, 40%, if you are interested, I can very well import this goods. And in case of imports, the applicable rate of duty is 30%. So now Shivam is a smart businessman, where he knows that there is a customs notification where on these imported luxury cars or the good old treasury vehicles, the rate of duty is only 30%. Now what happens here? The domestic market is deprived and the imports are going to get shooted. One of my example, if you recollect, I have given example of this steel scrap. Now, generally, the domestic market with vis-a-vis overseas market. Now, for a moment, this steel scrap is subjected to 18% if manufactured. Now, these days we don't have any more central excise, we have only GST. If the steel scrap which is generated out of any manufacturing process, the rate of tax happens to be 18%. And for a moment, the duty, if I have imported from overseas, is 5%. Now, what happens? No one will buy the scrap which is available in India. Everyone will buy this steel scrap which is imported into India. Now, what is going to happen? There's a imbalance. I call this as a trade imbalance. Now, keeping this in mind, the Ministry of Finance, which takes care of, Mansa, your point, the GST Council you're referring to, the advisory who is working, I call them as TRU. This advisory who is working in the Ministry of Finance, they are going to examine what is the rate applicable in domestic market, what is the rate we have fixed in case of imports. Now, if this is going to happen, now they wanted to fill this gap. How do I fill this gap? They say, please pay customs duty, please pay the IGST, which is called as tax. Also, please pay something called cess. I fix something called tax or cess applicable on the goods at that point in time, applicable at that point in time, in addition to my customs duty. So if you recollect your definition called assessment, I made you to write a point called duty plus taxes plus cess. The logic why the customs law refers to any other tax at a point in time is for this particular purpose. So just to fill this imbalance, my levy under my assessment under customs law makes me to pay customs duty plus tax, which is called GST, plus cess if applicable. When I say tax, it is IGST, compensation cess, which is there as per your GST law. All these three components sums up to my value for import. Now, what I'm doing, I'm making my imports not more competitive with my domestic market. Sir, aren't you making the imports very tough? Answer at times, yes. I'm making overseas, the market of imports much pretty higher compared to the domestic market. Why? Protecting the domestic manufacturers. With this, I jump into my section 12, which deals with my charging section. Section 12 under Customs Act 1962 says that, except as otherwise provided in this act, or any other law for time being force. When I refer to this term, any other law. Now, please remember, students, this is quite old law, which is formulated in the year 1962. In 1962, we had sales tax, we had central excise, we had octroi, we had entry tax. Over a period, sales tax has become VAT, right? So now the office is concerned, does not want to bring elaborated those provisions. They just say any other law for time being in force. So when there was sales tax, I was collecting sales tax. When there was VAT, I was collecting VAT. When there was octroi, I was collecting octroi. Now GST is there, I'm collecting GST. So this is to make the life of the tax administrator. They say that under this act, I collect something called duty. Under this act, I collect something called duty. In addition to duty, I collect something else called tax for time being in force. Duty of customs shall be levied at such rates as may be specified in Customs Tariff Act. So whenever I have to pay my tax, I have to refer to my Customs Tariff Act. In short, we call this as CTA. Schedule 1, imports. Schedule 2, exports. So here what I'm going to do, for the purpose of levy, I collect something called duty. This duty also includes tax. And when I have to look at the duty, what is the rate of tax? I refer to my Customs Tariff. Provisions of subsection 1 shall apply in respect of all goods belonging to government as they apply in respect of goods not belonging to government. Look at this very bold provision. Not belonging, as if not belonging to government. Belonging to government. They say that, look, when I talk about a levy, I don't want to make any differentiation. Be it your government, be it non-government. For a moment, for an instance, Bruhat Bengaluru Palike of Rajasthan, Mahanagara Palike Limited of Tamil Nadu. All these local municipalities, panchayats, who are they? They are local bodies. They are state government entities. For a moment, the Electricity Board of Maharashtra, say Mumbai. This electricity board wanted to import some conductors, some cables. Should they need to pay duty? Answer is a big yes. They say you are a government or not government. It doesn't make any difference for me. Whenever I talk about duty, reference to section 1, equally applicable to the government also. Now look at this picture, the charging section. Now section 12 is a levy, which talks about levy charging section. Like you have this electric pole having multiple wires. Now this is the complexity we have even under customs law. Theoretically, it is very simple. But once you get into practice, a lot of exemption notifications is what you have to evaluate. Where you will see, in relation to government, is there any general exemption? So whenever I talk about duty, is there any general exemption for government? So if there is any exemption notification, they need not pay. If there is no exemption notification, by default, they also pay the customs duty. And as on today, imports by Navy, specific equipments by police, Ministry of Defense are completely exempt by virtue of a exemption notification. Please keep in mind, in case if the Ministry of Finance forgets to extend a particular exemption notification, even Navy, Defense or Police, they have to pay customs duty. For instance, say you have these drones. Now these days you see wherever there is a election campaign or police wanted to conduct some sensitive areas survey, or no, they wanted to visit, they have these drones which are used as a security parameter. They could buy domestically or they could import from a particular nation. In case the drones imported were not notified by the Ministry of Finance, there is no choice. Police, Ministry of the security, the state police cannot go to the customs authority and say, how dare you to levy duty or demand duty on me? Customs authority says simple, look, charging section doesn't make a difference between government or non-government. Any person, please give me an exemption notification. If there is something missing, please write a letter to the Ministry of Finance. Please get a parliamentary approval and then get the exemption. Otherwise, no choice, please pay the duty. Now, whenever we read this section 12, which talks about levy charging section, there are three sections which also we need to keep in mind. Please write down in your working note. Please write down in your working note. Section 13 hyphen pilferage. Section 13 13 hyphen pilferage. Next bullet point. Section 22 hyphen abatement for damaged goods. Abatement for damaged goods. Next bullet point. Section 23 remission hyphen lost, destroyed or abandoned. Remission hyphen lost, destroyed or abandoned. Now, for ease of remembrance, please keep in back of your mind. Like if you think of Lord Sri Rama, there are three people who always be remembered in back of Lord Sri Rama. Who are they? Sita, Lakshmana, and who else? Lord Hanuman. Right? Now, just correlating how you remember this provision. Examination, you need not write Ramayana or Mahabharata, you will not get answers. Just back of your mind. Whenever you remember section 12, that is with respect to levy, back of your mind, you should remember there are three more people. When I think of Rama, I have Sita, Hanuman, Lakshman, or Sita, Lakshman, Hanuman. I have section 13, which deals with pilferage, section 22, which deals with your abatement, section 23, which deals with your remission. That means, should I need to pay duty? Answer these three questions. Was there a pilferage? No pilferage. Was there any damage? There is no damage. Was there any loss or destruction? No. Then please pay your customs duty. Again, I repeat this 3 point, students. Whenever you examine section 12, whenever you examine section 12 for the purpose of levy, that is to pay customs duty, please ask these three questions. Was there any pilferage? Answer is no. Was there any damage? Answer is no. Was there any loss or destroyed? Answer is no. Then please pay the duty determined under section 12. This is how we read these three provisions together. In detail, how you remember 13, 22 and 23, I'll explain at a later point in time. Moving further. goods imported or exported from India, there should be a duty payable as referred in Customs Tariff Act. When I refer to import, Schedule 1. When I refer to export, Schedule number 2. Goods of import or export by government are treated with non-government parties. Now, relevant case laws for determining the chargeability, levy. Now, there is one Supreme Court judgment which is also quoted in your institute material. Examination, not mandatory that you should quote the case law. Garden Silk Mills versus Union of India. Even without quoting, as per the provisions, as per the settled case laws of Supreme Court is also good enough. Not guarantee that you should get full marks only when you quote your case law. Now here, when goods are cleared for home consumption, import of goods commence. Import of goods commence when they cross customs territorial waters, but continues and is completed. The language used is completed when they become part of the mass of the country. The taxable event being reached at the time when the goods reach customs barrier and bill of entry for home consumption is filed. Now I'll give you an example. Let me just take a blank screen. Say, for a moment on 13th August 2022, a vessel has made its entry to Mumbai port. A vessel has made its entry on 13th August 2022 to Mumbai port. On 13th August, the rate of duty is say 12%. The customs station, the customs authority have said that, look, there is no enough space in the dockyard. Please wait for some moment, because to get into customs station, that is customs area, I need to have a prior permission. So whoever is the owner, the captain of the vessel, they have to make a prior permission. Look, I'm coming to the customs station. Please, this dock is meant for me. Please give me a permission. The customs station said that, look, there is no enough space. Please wait, which happens in the air flight stations. You would have experienced, like, so you're flying from Delhi to Kerala or Kerala to say Mumbai. You would reach on time to this particular destination, but you're flying in the air more than 5 minutes, 10 minutes, 15 minutes, because the pilot doesn't get the clearance from this in charge of the concerned station. Likewise, this vessel, say it went to Lahore, and it has come back again to make an entry in Mumbai on, say, 20th of September 2022. On 20th September 2022, it went to Lahore, it made some loading, unloading, came back to Mumbai for unloading. At this point in time, the rate of duty happens to be, say, 16%. Now, what happens to an importer? Importer is a person who is always going to question, why should I pay higher rate of duty? He always argues that, look, the vessel is ready for clearance on 13th August, but the customs station, for want of higher rate of tax, they didn't permitted my consignment. It came only on 20th September. So the rate of duty should be at 16%. Now, this was a kind of argument when in this Garden Silks case, where they say that I don't want to pay 16%. The vessel made an entry into customs station on 13th August, but because of space constraint, it was made to go out of customs station and come back. So they want the CC wanted to pay 12% rather than paying it 18%, 16%. So where the Supreme Court said that, look, the levy under Section 12 gets attracted only when the goods cross customs barrier or rather customs station. That means to say the goods should form part of the landmass. Domestic tariff rate of tax you have to pay. This is one argument which happened in your this garden silk mills case. So this is a point where the law says that the taxable event shall be the point in time when goods reach the customs barrier and bill of entry has been filed. Next, goods cleared for warehouse. This is another judgment in case of Kiran spinning mills. Now, I have explained the concept of bonded warehouse, right? So here, in case of a bonded warehouse, the goods have gone to a bonded warehouse. The customs, they say in case of warehouse goods, the customs barrier would be crossed. When it would be crossed, when they sought to be taken out of customs and brought to the mass of goods into the country. Now, I'll give an example again to explain this. Kiran spinning mills case. Let me go to a new screen. Say the vessel came into customs station on 15th December 2022. That point in time, rate of duty happened to be, say, 16%. Just arbitrary rates I'm picking, students. This, say, Mr. X happens to be an importer. Mr. X happens to be an importer. So what he has sought, he filed an application to take it to bonded warehouse. And these goods were kept in bonded warehouse for 3 months. At later point in time, say on 15th March 2023, the rate of duty happens to be, say, 24%. Now, when the X has cleared goods to domestic tariff area, he cannot claim that since the first point, this is my point number 1, entry 1. This is entry 2. So here, Mr. X is arguing that, my lord, when I brought these goods into the Indian customs station, the rate of tax is 16%. Subsequently, the rate of tax went up to 24%. Please consider this entry number 1 and please give me a relief of 16%. In this Kiran spinning mills case, the Supreme Court has said that the point in time when it is going to become the mass of the domestic tariff area, that is a point in time when I would say that the rate of duty gets triggered. Not till the goods are lying in your bonded warehouse. Only when you have shown your interest to bring it out of your customs bonded premises, that is the point in time this levy is going to get triggered. So in this case, the courts have held that the applicable rate happens to be 24%. Applicable duty happens to be 24%. Examination, expect a 3 months problem where the question may be in this line or slightly filtered, where scenario 1, this is what we have discussed. Scenario 2, the rate of duty happens to be, say, 18% when the goods, the vessel came into the customs station. So these were stored in a bonded warehouse, and after 3 months, the goods were removed, where 12% happens to be the rate of tax, the duty rate. So can revenue, that is the customs authority, demand customs duty at the rate of 18%, not 12%? Instead of 12%, can they demand the rate of duty for 18%? Answer would be referring to the spinning mills, this Kiran spinning mills case, where you will say the day point in time when the goods are going to become mass of the country, that is a point in time levy gets triggered under section 12. Accordingly, under section 12, my rate of tax happens to be 12%, not 18%. Contention of the revenue is incorrect. This is going to be your answer. Let me see if you have any doubts so far. Examination, please expect 3 marks problem on these 2 examples what I've explained. Martha is asking this question. Anti-dumping duty will be levied to protect domestic industry. Absolutely correct, Martha. Next class, I'll give a couple of notifications where the customs authorities have identified few products, especially the steel-related products, where any imports from China were all subjected to anti-dumping duty. Jaiswal is saying economic law classes schedule. I'm not clear with your question, Jaiswal. Mansa is saying that charging section and determination of taxable event both comes under section 12 of custom tariff. Absolutely correct, Mansa. I get into this assessment under section 12 to identify the point in time. Now, section 15 also comes to this rescue. Section 12 read with section 15, Mansa. In a while, I'm going to club both these provisions and make it clear for you. So far, these are the questions we have. Now, similarly, in exports also, we have discussed in case of imports. In case of exports, the provisions is that exports of goods is complete when they cross the territorial waters of India. So this is what we need to understand with respect to section 12. Now, I just made a summary of 2 case laws. Both this is paid before such clearance. Duty is paid before such clearance. That is, I pay the duty and then take the goods into my domestic tariff area. In case of warehouse, I don't pay any duty. I take it to a warehouse where I pay rent, interest, and other warehouse charges. Bill of entry is filed for the home consumption. Permission is sought for warehouse purpose. I repeat, bill of entry is a permission sought for home consumption, and for warehouse, permission is filed as sought under section 46 just to park it in your warehouse. Now, reimportation. I'll give you the background of this notification and then I'll explain you these provisions. Let me come to a fresh slide. Just give me a minute. Let me see if my Excel is working. Just give me a minute, students. Yeah. Now, this slide, reimportation of goods, section 20, which deals with concessional rate of duty or exemption from payment of duty. Section 20 is a special provision. I'll explain you the backdrop and then we will understand this provision. Say, I have exported goods which is meant for a regular supply. We have this LUT or bond, right? Now, once I have exported, at the time of exporting the goods, options available for me. Please avail LUT or bond. That means I will save the custom, the GST by taking a LUT or bond to comply with the requirements of Section 16 of IGST Act. Or I, as an exporter, I may claim duty drawback. Or I, as an exporter, I may export under foreign trade policy incentive, FTP incentive. that is complaints required for EPCG or duty-free import advance authorization. That means to say, I'm a manufacturer, I have imported a machinery. When I have imported a capital machinery, I have to pay customs duty. I'm going to tell to the customs officer saying that I'm going to use this machinery for the purpose of manufacture. I'm going to export the goods out of India. Since I'm using the goods in manufacture for export out of India, please, whatever customs duty is payable, please give me a relief from customs duty. So they say that if you have saved 5% of, say 5 lakhs customs duty, 5 times of this, you have to export to get the benefit of saving this customs duty. So this is a mechanism called EPCG. Now, these are the various modes I have in relation to exports. Now, any of these factors are applicable to me. What if the goods are rejected by customer? Rejected by customer. Now, a goods worth rupees 10 lakhs are exported. If these goods are coming back to India, should I need to pay customs duty again? If answer is a yes, majority of the business are going to suffer. That means I exported the goods because of quality issue, because of timing gap, because of wrong shipment, because of any other reason. My customer rejected the goods. And the goods come back to India, I call that as re-import. Please make a note of this, re-import. Re-import means exported goods are imported for quality issue or repair purpose. Now, I call my own goods which are exported, which are imported back for various reasons. I call that as re-import. Question comes here. So what is a stand as an importer? I was an importer at one point in time. I am taking back the same goods as a re-import. Should I need to pay customs duty? This is one question I'm going to answer in a while. Next scenario. This is one set. Second scenario where I'm a manufacturer. I have manufactured the goods and exported. Now, these goods are covered under something called warranty or maybe post-warranty. Classic example, mold. You can call MOULD or MOLD. Used either ways. Mold is a pattern which gives a shape. For an example, say I have this pen which I'm holding. This particular pen has a cylindrical shape. So how do I get the cylindrical shape? There is a machine where if a plastic which is in a semi-liquid stage poured into a machine, it gives this cylindrical shape. Cylindrical shape with a tip which is projected at 5 degrees. Now, how do I get this shape? Because of my mold. Now, these molds are pretty costly. Why it is costly? This requires a design, this requires a pattern, this requires some sort of process over which this gets evolved. Now, molds are not destroyed just like that. It has a life. Generally, these molds have a life of 10 years. Not 10 years, even it goes beyond 10 years. Life of 20 years. Now, I could have these molds which are brought into India, maybe for repair, maybe for refurbishment, maybe for, I can say, a redo. That means altogether I scrap and prepare once again. Now, what happens here? I, as an exporter, I'm going to import this machinery. When I import this machinery, should I need to pay customs duty? Should I need to pay customs duty? Now, these are the two scenarios which are covered under section 20, read with section 25, read with section 12. That means to say, when I look at my customs duty for charging section, will there be any exemption for the goods which are imported under section 20? Under section 20, I call this as re-import. I call this as re-import. So when I talk about re-import, will there be any exemption notification? And do I need to pay any customs duty for these cases? This is what we will understand under section 20. Students, we are at 7:40. Let's have a quick break of 9 minutes. 7:50, we will reassemble back. So let's have a break for 9 minutes. Welcome back, students. Welcome back. I have Kaushiki who's mentioning that there is an error in playing the class on Board of Studies live.ica.org. Please solve immediately. Kaushiki, I have escalated to the technical team at the back end. Sorry for the inconvenience. Now. It was working in starting, but in break, I refreshed after then errors is coming. Only YouTube it is working, but there I can ask doubts. Okay, we have informed the backend technical team, Kaushiki. We will, yes, it is not accessible right now. Ashok, you can check. Meanwhile, I am taking my session, Ashok. Yes. Students, I have informed the technical team. Sorry for the inconvenience. They are going to resolve it back, right? Now, let's come to the discussion where we stopped. I gave two examples, two instances where we were going to touch upon re-importation of goods. Now, here, when I say re-importation, what do you mean by re-importation? If goods are imported in India after exportation therefrom, that means I have sent the goods, either my own goods or someone else's goods. That's how this re-importation comes into picture. Such goods shall be liable to duty and be subject to all conditions and restrictions to which goods of like kind and value are to be subjected. It indicates that goods exported under later re-imported shall be treated at par with the goods. Now, it is going to create imbalance where this notification comes to rescue and say, don't worry, I give you a one-time relief. What is that one-time relief? This notification, please look at this notification, 45 of 2017. So this notification comes as a rescue and says, in case if you have exported the goods, how did you export it? You have exported under LUT or bond, or you have exported under duty drawback, or you have sought for refund of IGST paid at the time of exports, or any other case. Now, in these cases, I'm going to give you a mechanism called concessional duty. Concessional duty means don't pay the regular duty, pay the concessional duty. I'll ask you the basic amount. What is that basic amount? Look at this particular slide where they say that point number 1. In case if you have exported the goods for duty drawback or refund of IGST paid or IGST paid without payment or LUT or bond. In that case, in this scenario number 1, whatever is your incentive avail, please pay back that incentive as the customs duty. Now, duty drawback. For instance, now the rate of duty drawback is 2%. 2% on FOB value. Now, assuming you have exported consignment worth 10 lakh, you have received 20,000 as your duty drawback. Then this provision says that, look, you have received 20,000 as duty drawback because these goods are coming back. Only that amount what you have claimed as an incentive of duty drawback, paid back. This is called concession. Now, isn't it worthy? Instead of paying the regular duty at the rate of say 14% or 16% or 7.5%, 12%, I pay only that benefit which was enjoyed. Alternatively, sir, what if I have claimed a refund? I have claimed a refund. They say, don't worry, you have claimed refund of 18%, please pay it back. Why? Because you got that refund of 18% with a promise that goods are being exported. Because the same goods are coming back, I'm going to withdraw that particular benefit. This is your point number 1. Point number 2, where goods exported is other than serial number 1, which is meant for repairs abroad, Now, this is an example where for a moment, let's assume that I have imported a particular machinery from Toshiba, say Toshiba, Japan. This machinery has some malfunction where I have to send back this machinery or a component of machinery to Japan. Now, this is a case where I export and re-import. When I export, I don't pay any duty. When I re-import, sir, my own material coming back, you're asking me to pay the customs duty. Now, there again, this concessional duty under notification 45 comes and says, don't worry. In this case of repair, please do this way. Pay the duty of customs, which would be leviable if the value of re-imported goods, after repair were made up for the fair cost of repairs. So they're saying that, what is your cost of repair? Please pay the duty on this cost of repair, whether such cost actually incurred or not. So what if I have incurred 1 lakh as a cost of repair? It is under warranty. I never paid that 1 lakh. This provision says, I don't see whether you paid 1 lakh or you didn't pay 1 lakh. Because it has been sent out, there was a valuation. It is coming back after valuation. What is the value of valuation? That is cost of repair. Also, is that only that? No, they say insurance and freight. Insurance and freight, both the ways. Insurance and freight, both the ways. To and fro. Like when Lord Hanuman has visited to Sri Lanka, he has visited to Lanka on behalf of Lord Sri Ram. Hanuman was given to and fro fare charges, right? Something like that we have to keep in back of mind. Whenever I have to pay customs duty, the cost of repairs, whether or not paid, freight and insurance, 2 ways I have to take into consideration. On that, you pay your concession duty. Is both the points clear? I'll halt because there is an issue with the app. Let me see if there are any issues. Students, please let me know if you have this issue with the mobile app still or it is resolved. Our technical team says that now it is working fine. Hope you're able to see it properly. Okay. Okay. Done. Students, it seems the issue has been resolved. Hope it is working fine, ma? Yeah. Shivam is asking this question. Says, since they charge duty on fair cost of repair, but isn't it that a service of repair for which they are charging duty? Absolutely, Shivam. Not on the value of component, only on the value of repair they are charging duty. Like since there is a valuation, like I have sent a so there is a compressor, air compressor. If you visit this petrol bunk, there is an air compressor which puts the air into the tire. So there is a compressor which sucks the air or puts the air. For a moment, there is a compressor which is not functioning well. This compressor worth, say, 20 lakhs has been sent to Japan. The manufacturer, because it is under warranty, he did a repair. He said cost of repair is 1 lakh. Now, when I import back Shivam, not entire 20 lakhs I'm paying customs duty. I'm just paying on the repair called 1 lakh because the valuation, this 20 lakhs compressor has become 21 lakhs because of the repair. So the government says, I'll charge only on that 1 lakh portion. Hope this is clear, Shivam. Great. Coming back. Now, not all this comes free of cost. There are certain terms and conditions. What are those terms and conditions? They say that, look, I'll give you a time limit of 3 years from the day you have exported. Within 3 years, you have to import and whatever concession you want to claim, please claim. Sir, is that 3 years extendable? Answer is yes. You showing us the efficient cost, it can extend up to 5 years. The same goods should be exported and re-imported. Now, this is little important. The goods which are exported and goods which are re-imported should be same. Now, it is $1 million question. So, how do we ensure that the goods are going to be the same? Now, answer for this question. When I say same goods, these goods should have a identity, should have a specification which matches. This, if it is not maintained, then I cannot enjoy the benefit under 45 of 2017. And last but not the least, very, very important, tax planning happens in this area. No change in the ownership. For the second case where I'm talking about repairs and all, I should not change the ownership. For an example, for a moment. Say Shivam is a dealer in this A compressor. Shivam happens to be a dealer in A compressor. Kaushiki has purchased this A compressor from Shivam. Shivam purchased it from Toshiba, Japan. Now, Toshiba, Japan has given 1 year warranty to Shivam. Now, Shivam, when he's selling to Kaushiki, she also gets that 1 year warranty. But if some repair has to be performed, when Kaushiki is exporting to Japan and bringing it back, she will not get the benefit. For the reason, the ownership from Shivam has been transferred to Kaushiki. So in that case, government says nothing doing. If Shivam is the owner at the time of purchase, and when he has sent it for repair and when he is brought back, the time when it is coming back to India, Shivam should be the only person who should be the owner. If this ownership is changed, the benefit under this notification is not going to be sustained. Moving further, they say that, look, whatever said and done this notification, I will not give this benefit to the units which are operating as an EOU or free trade zones. For the simple reason, already EOU was getting a customs duty exemption. Even a free trade zone is getting an exemption. They export and bring it back. I will not give you 2 times benefit. Similarly, there's goods which are exported from a warehouse. When you never pay duty when you have exported in a warehouse, why should I give you a benefit when you import it back? And goods covered under 4th schedule. 4th schedule, generally the alcohol and tobacco products. These 2 products, there is no benefit under this 45 of 2017. Now, this is the next scenario which I was explaining. I am a manufacturer where I have sold the goods. My customer has raised an issue, performance issue. May be under warranty, may not be under warranty. So my own goods, when it is coming back, why it is coming? For repair, reconditioning, reprocessing, remaking. Now, students, please observe this language carefully. Reconditioning is one set. This is one process. Reconditioning, reprocessing is altogether another set. I can call this as a second set. Why? Repair, I just do malfunction, I'll address to that. Reconditioning, completely I'll revamp. Reprocessing, again revamping. Remaking, again, this is a whole together new process. So when I do reconditioning, reprocessing, remaking, identity of the goods may change. That could be a exposure when I talk about reprocessing or reconditioning, right? So what is the benefit under this notification? Let us see that. So here there is a notification reference to 158, which says that in case of goods manufactured and re-imported for repair purpose or reconditioning. Okay, repair and reconditioning both were brought under one bracket where they say 3 years is a time limit for re-importation. That means to say 2012 I have exported the goods. Till 2015 I can re-import the goods for repair purpose. I exported in 2012, I can re-import for the repair without payment of full customs duty up to 3 years. That is up to 2015. So what happens to Nepal and Bhutan? This time limit was given to 10 years. Instead of 3 years, they have given to 10 years. So why is that this partiality? Policy matter. Few things we cannot question. Why you gave 3 years here, why you have given 10 years. If you want to challenge this treatment, say in case of US, Japan, America, other countries, law says 3 years, only Nepal and Bhutan 10 years. If someone wants to challenge this, courts will say, look, it's a policy matter. We cannot intervene in a policy matter of a parliament affairs. So this cannot be challenged. In any of repair, reprocess, etc., my time limit to re-import is 1 year. Reprocessing, I'm going to make a completely new product. Now, again, these are subject to certain terms and conditions. What is that? I have to work back and send these goods within a period of 6 months. Whatever goods have come back, you cannot hold those goods. What I have to do? Reprocess, repair, recondition, send back within a period of 6 months. Extended period up to 1 year. Similarly, when you're sending it back, this identity of the goods should be met to the satisfaction of the concerned AC or DC. Concerned AC or DC. Theoretically, this is just one line. Practically, this is the cases where most of the applications under customs are rejected. For the reason, I'll just give an example. Say I have a notebook. So this is my notebook. Now this is looking like a notebook, but I call this as a digital library. Now I think you cannot see. Say this notebook is a digitally printed where it was made such a fashion that any person who's not able to see, for the people who are blind, it's a braille book. There is a machine, like you have this torchlight on the table. There will be a machine on the table. The moment I insert this book below this machine, that reads the contents in the page and it shows what is here. So here, for a moment, assuming this machinery has been malfunctioning, I've sent and I've got back. Now, what was the old machine? What was the new machine? Now, if you have a serial number, they'll say serial number this you have sent, serial number this you have received back. That is the identity. So, what if serial number is not there? Maybe batch number. Unless you have an identity number, it is very tough to prove to the satisfaction of this customs officer. Next. Section 21. Theory question, examination, 3 marks can be expected from this term called derelict, wreck, jetsam, flotsam. Now, I'll give you the backdrop and then I'll explain you this provision. Kaushiki says, still issue, it's not working. Okay. No, Kaushiki, you are alone because no other students have reported this issue, Kaushiki. But anyways, I'll escalate to our technical person, Mr. Ashok. Let him look into this. If you can give you a number, I'll ask the technical team to get in touch with you, Kaushiki. If you can share your mobile number, someone from Board of Studies technical team will call you and get it resolved. You can type your mobile number in the question window. Now, coming to this, what is the topic we are? Derelict, yeah. Say there's a vessel. Not good at drawing, but imagine that this is a vessel in the tide water. Okay? Now, there's a captain of this ship. There could be scenarios where this vessel, because of age, it will be malfunctioning. Means, in spite of repair, the hope of operating is a failure. That means you have come to some distance. There was some malfunctioning where even after repair, they have lost the hopes and they have left the vessel as it is. This could be one scenario. Second scenario, smuggling. I'll not touch that. Whenever there is a investigation or etc., people will leave the boat and they run away. That could also be one another case. This case I call as a derelict. Derelict. That means scenario where the ship or vessel has been abandoned because of its condition of usage. This is the starting point. In the process of journey, assuming for a moment, there are tides which are beyond control, where the captain says to protect the passengers or ship, to protect ship along with passenger, he says that, look, let us throw some objects. He cannot throw the passengers because it's going to be a criminal aspect. They throw objects into the ocean out of the ship. Why sinking? They say that because of heavy tides, the weight of the ship is not being controlled. Let's throw some objects out of the ship. That's called jetsam. Now, in the process, these objects which were thrown due to the tides or due to the waves, some objects try to float on the water. That's called float SAM. The objects which are floating on the water, this is called float SAM. Right? Now, these goods, tide SAM, jet SAM or float SAM, the goods which reach the customs border, where I was talking about your territorial waters. Assuming the goods are reaching the customs area, now these goods are dutiable. These are subject to duty unless proven why duty is not payable. That means to say, any goods which are jetsam or floatsam, which are reaching the customs area, those are called as dutiable goods. This is a backdrop with which this derelict, jetsam, floatsam is there under your provision. Right? Let me come back to your provision. Section 21, derelict, wreck, etc. Goods brought into India is not confined to normal goods. It is also goods which are intentionally brought or unintentionally brought. So this provision is applicable to derelict, jetsam, floatsam, and wreck. Derelict, it refers to a cargo or vessel which is abandoned in the sea. Why? There is no hope of recovery. Jetsam, the goods which are jettisoned, that means, as I said, the captain has thrown out to protect the ship or vessel from sinking. Those goods which are thrown out, which are floating on the sea, is called floatsam. Wreck, this refers to a cargo or vessel where a property is cast to the seashore by tides. That's called wreck. Next. Before I touch upon this provision, let me see if there are any questions. Importation of goods at concession rate. Mansa is asking this question. Sir, is there any provision in the customs law to reduce or eliminate customs duty in emergency situation? Liquids, oxygen cylinders, etc., which are regularly subjected to duty because of the emergency, they give exemption notifications. Yes, the Ministry of Finance works on these aspects. Now, there's a topic called importance of import of goods at concession rate. There are 3-4 slides. I'll not read the theory because theory you guys can read at any point in time. I'll give you the background of this import of goods at a concession rate. Import of goods at a concessional rate. Government, now these are the 2022 rules. This is the new rules which have come from September 2022. September 2022. So most likely this is an amendment before 31st October. When you are giving your exam in May 2023, a theory question can be expected. If you ask what is there in this topic to test from examination point of view, it's a whole long theory. Like what procedure? It's all procedural law. As such, from final point of view, expect always unexpected. So recent amendments, God knows if the examiner is planning to lay hands on this, it may be tested for your examination purpose. Just give me a minute. Yes. So this rules, I'll put it this way. Applicability. Applicability. Then permission. Then import. Then job work. Then end user. Then accounts and records. Last but not the least, complaints, provisions. Then one pattern, applicability of duty on capital goods after usage. There's one particular page where you will see every quarter 4%, then 10%, 20% usage of the capital goods. Probably that is one particular slide. As a theory, you can expect a question if examiner wants to test this particular topic. Backdrop, I'll make it very simple for you to understand. First and foremost, this rule says that wherever a notification has been given saying that these are the goods notified, then you can make an application under this rules called import of goods as concession rate. What is a backdrop? Sir, I'm a manufacturer or I'm a service provider. I manufacture and export goods. I render services which are exported back again. For a moment, assuming Dell gives me a contract to manufacture conductors or microchips. If I manufacture a conductor, I need some sort of electronic components. Now, these electronic components, I either procure domestically or I can import. In the process of making a conductor or capacitor or electric circuit, which is used in turn by Dell, I'll be called as a manufacturer. So there is a notification where it says, Praveen, you have been given this list of items which are called as specified goods. Specified goods. So as a manufacturer, I wanted to import these goods, use for making semiconductors, and then export back to Dell. This could be one scenario. Alternatively, I'm a service provider. What is that you are doing as a service provider? Let's assume I'm a job worker or contractor for Apple. What I do, I get an integrated circuit. I have to just do the testing of integrated circuit, embed a software which is manufactured or which is programming done in India, embed this program into the integrated circuit, do the testing, sending it back to US. So I could be a service provider. What am I doing? I am importing something called integrated circuits. So here the government says, if you are a manufacturer or if you are a service provider who is into specific activity where you use it for your manufacturing process, export, use it for service, export the services. Those cases, you can make an application. You are entitled. So first and foremost, a notification will be looked upon. Then what will I do? I make an application, import of INC 01. There's a form where I just fill my details. What is my nature of business? What is the address? What goods I need? What activity I do? How do I export back? Now, all these processes I explain in a form called INC01. If this is approved, then I get a form called IN1. This is the intimation approval one. So it is everything online. After GST has come, online is the mantra for everything. Earlier, I used to go to the customs jurisdiction AC or DC, make an application physically and get a permission. Now it's an online application. It's like your LUT or bond. So once I get an application approved online, this application I forward to the jurisdictional AC or DC who is dealing with my import consignments. Every import consignments, when I file my bill of entry, there's an appraising officer. This appraising officer, who is going to be the jurisdictional ACDC, they will look at this approval which is given by the customs officer. then they permit to bring those goods into India without payment of customs duty. I call concessional. Means I don't pay any customs duty. Now what happens here? Sir, I bring the goods, I have to send it for job work. Then the law says that you can send the goods for job work, please raise invoice. Please don't compare the DC, delivery challan under Rule 55 of GST law. This rule says that raise the invoice, prepare an electronic e-way bill for sending the goods to job worker. Let the job worker maintain the records, how many goods he has received, what process he has done, how much output he has generated, how much scrap he has generated. Send back the processed goods from job work. Now, for this job work, I have to maintain accounting records. Accounting records, I have to maintain inventory with me, inventory with job work. Before 10th of subsequent month, like your GSTR 111, on or before 10th of subsequent month, I find a simple form electronically. What will I say? Sir, I imported, say, 10,000 units. I used 6,000 for manufacture. I exported so many units. 4,000 lying in job work. Or, say, 10,000 has come. 6,000 have consumed in manufacture. 3,000 have given for job work, of which 2,000 have come back. 1,000 is lying with job work. Balance 1,000 units are lying in my physical stock. Now, all this process, I file a simple return, which is called record maintenance. So, examination, you may be asked one question, theoretical question on job work, or maybe on accounting records. Third, in between is end user. That means, so what if I'm not able to consume these goods? If there is another manufacturer, I can transfer this permission from my end to another end. This is another sub rule. Last but not least, the capital goods. Now, as I say, this law says that on the basis of usage, over a period of time, you can dispose the goods with a prior permission. That means to say, they say assuming 1 lakh USD is the value of goods. These goods have been used for, say, 3 years. Because the assets were disposed after usage, there's a rate of depreciation given under a rule. This rate of depreciation, we just need to mug up and present in your examination. But for this, there is no other problems which will be asked in your examination. This is to do with your import of goods at concessional rate of duty. Let me see if there are any questions. Kaushiki, you can send your number on your this question window. Someone from the technical team will reach out to you. So far, so good. No questions. Let me come back. Next. Section 15, connected with your section 12, if you remember this Kiran spinning mills and garden silks case, both were prior to this evolving of section 15. This section 15 has put into all this judgments or litigation which was happening to fight when was the duty to be paid. So section 15 says the date when the duty has to be paid will be determined. So first, in case of home consumption, that means goods have come. I don't want to take it to warehouse. I just wanted to use it for my domestic tariff area. They say, look at the date. Look at the date for filing the bill of entry, or look at the date where entry inward of the vessel happened. Whichever is later, that shall be the date where you have to pay your customs duty. I repeat once again. Look at your date of bill of entry. Look at the date when vessel has come into India. Based on these two, whichever is later, that is the date when your customs duty is payable. Let me quickly take to example. Let me say entry of ship, bill of entry date, Let me have date. Let me also have rate. Let me have date. On that particular day, what is the rate? Now, let me have scenario. Say scenario 1. In scenario 1, say the ship has entered on 13th August 2022. The ship has entered on 13th August 2022. My bill of entry was filed on, say, 15th August 2022. Now, I'll put here conclusion as per section 15. My date relevant and my rate of duty relevant, right? Now, 13th August, I have entry of ship. Bill of entry is on 15th August. As per the section 15, which is the date relevant? My 15th August is relevant. 15th August is relevant. Assuming for a moment, the rate of tax happens to be 12% on this date, and the rate of tax happens to be 18% on this date. Now, because my section 15 says the date of relevance is later, 15th August is the relevance. Accordingly, my rate of duty happens to be 18%. My rate of duty happens to be 18%. Now, let's take scenario 2. Scenario number 2. For a moment, I got to know from the internal sources that the rate of duty is going to be hiked by the parliamentary affairs. So, 20th September, I filed my bill of entry. Actually, the ship entered the customs station on, say, 15th of 25th. Let me just make it very simple. Yeah. 25th September 2022, the ship has made an entry. On 20th September, the rate of tax duty happens to be 6%. On 25th September, the government has enhanced the rate of duty to 18%. 18%. Answer as per section 15, either entry of ship or bill of entry, whichever is later. So accordingly, 25th September 2022 happens to be the date relevant for us. As per this, what is the rate applicable? 18% is the rate applicable for payment of my customs duty. This is the importance of your section 15 to determine your rate of duty. Let me see if there are any questions. So far, so good. I hope this example is clear. Let me move on further. Now, we discussed this goods clear for home consumption. Now, goods clear for warehouse. Goods clear for warehouse. So in case of warehouse, what they say, my date on which bill of entry for home consumption is presented. So the day when you took into warehouse is irrelevant. It may be higher, it may be lower. From warehouse, the day you present your bill of entry, that is the day relevant. Any other cases, the day when you make the payment of duty, that shall be relevant. What is that? Any other goods? Maybe your dairy fruits and etc. Goods have come with the tides. I have nothing to do with your bill of entry and all. It has gone for public auction. Whoever has paid the duty, the day the payment is received, that will be the relevant date for section 15. Now, pilferage. Pilferage, when we talk about this section 13, remember this section 12. Section 12 read with section 13, that is pilferage. Section 22, which deals with your abatement damage. Section 23, which deals with your remission in case of loss or damage. Please remember this example. Whenever we think of Lord Shriram, section 12, we think of three more people. That's how section 33, section 13, 22, 23 comes into picture. Pilferage is a provision which deals with your petty theft. When I say pilferage, I'll give a very good example for you to remember this provision. Imagine a crate of soft drink. People who drink this Pepsi, Coca-Cola, or any other soft drink. Imagine a crate. Say you have a party at home. You have purchased a crate of 12 pieces. So when you buy, there are 12 bottles in the crate. For a moment, someone managed to take one bottle out of the crate. Now, when you look at the crate, you have this, a hole, like bottle holes where 12 objects can be placed. If one removes one object, you can see there are 12 holes or 12 holders. One of the object is missing. Like that is one example. Second example, another example of your chocolate box. When you have this, say, Kit Kat kind of thing, you have this embossing. Like, if you have, say, 10 chocolates, like, this 10 spots where 10 chocolates are placed. If one picked up one or two chocolates, please keep in mind, it's not entire chocolate box which is being stolen. It's not complete soft drink crate which is getting stolen. It's a one or two of the items which is being stolen. That's called pilferage, which is a petty theft. Now, in case of pilferage, the government says that, look, I'll not demand duty because the goods have been pilfered. Now, when they will not demand the duty? After unloading. The goods have been unloaded. Someone is fond of say, take example of this Coke, which is imported from Bahrain or this Saudi Arabian nations. This chocolates or soft drinks which are imported from this UAE nation, you have a different taste altogether. I don't know how many of you have tasted these chocolates. Definitely for the quality which we get in India, but the quality which you get from UAE, it's completely different. Make itself is different. Pure veg, I'm talking about vegetarian style. So when you import some material and goods are unloaded, means after unloading, but when before proper officer has made an order, before proper officer has made an order. Please take out your working note, write down. In your working note, write down 13 hyphen pilferage. Below that, imported goods pilfered after unloading, before proper officer made an order. Before proper officer made an order. Clear? Now, this is just what section 13 we need to keep in mind. So in case if there is a pilferage which I can prove, they say that the importer is not liable to pay the duty. Why I have to pay? Sir, I have ordered for 12 Pepsi bottles. What I have received is only 10 bottles. So the 10 bottles is what you will pay the customs duty. Yeah. So here they say, when you talk about pilferage, there should be a evidence that there is a tampering. It means, sir, look, this is a pack box. Someone inserted a hole to take a bottle out. You have 10 bottle holders, one bottle holder is missing. So I should prove with which I don't pay duty. So what if I have paid the duty already? Claim a refund. Show to the satisfaction of the ACDC. Claim a refund. Now, this is just, I'm making a contradiction saying that pilferage is applicable only in these cases. It is not applicable when there is a loss, damage, etc. This is just for your theory purpose. Next, I'm coming to section 23, which deals with your remission in case of loss or damage. I'll give an example. Then I'll come to this provision. Paucity of time. I'll make you the provisions crystal clear so that if you read later, you can understand easily. Remission. In case of lost or damage or abandoned. Now, say, when I say loss or damage, now this could be physical damage. This could be a physical damage. This could be a accident. It could be broken. It could be a fire accident. It could be a natural disaster. Now, what is happening here? The goods have been lost or damaged. That means these are beyond recovery. These are beyond recovery. So if there is a loss or damage, I, as an importer, I need not pay customs duty, provided this importer proves to the satisfaction of ACDC. So when the goods are imported and cleared, these are imported and cleared. And these are in the possession of whom? The customs authorities. When the goods are in the possession of customs authorities and the goods are lost or damaged, which is beyond recovery. If I can prove that this is not my intervention, this happened on its own. Example, sir, there was a crane which is lifting a container. For a moment, there is a motor vehicle in a container. Imagine this container is in the customs port. There is a car which is kept in a container. When the crane is taking this container, suddenly the link got broke, the container fell on the ground. Imagine the position of cars within the container. Everything will be damaged. It's called accident, broken or whatever with the thing. Now, once the vehicle break and falls from a height of say 20 feet, imagine the position of the motor car. Now, is that a mistake of the importer? Answer is no. No need to pay customs duty. Next case is your abandon. Now, there could be circumstances where there could be a wrong shipment. There could be a delay in shipment. There could be a terms of contract which are breached. These circumstances call where importer shows his disinterest. Now, you have this famous example, Badmash Company. I don't know how many of you watched this Hindi movie called Badmash Company, which was led by this Shahid Kapoor. One of the favorite instance picked up from this customs provision. What happens here? This hero places order for a pair of shoes. So this seller who is there on the other side, he sends consignment of only one leg shoe. Instead of left and right, leg shoe comes. Now this fellow says, what will I do with this? He abandons. When the goods are abandoned, whatever be the reason, you mark your disinterest and pass on, assign the right to the commissioner or principal commissioner of customs. So once you have given your right or title to this particular person in writing, then this importer is absolved from payment of customs duty. This is one example of goods abandoned. What if the goods are abandoned with the knowledge that something is fishy? With the prior knowledge, the importer says that I am going to abandon these goods just to save his interest. Then the law says that, section 23 says that importer will not be having a right to abandon his right. Rather, he has to pay the customs duty and take the goods into the domestic tariff area. This is the provisions connected with section 23. In entire discussion, the important point is proving to the satisfaction of ACDC. Now, this goods can get damaged even in warehouse or after clearance from the customs. While importing, the goods are cleared before filing the bill of entry. Any point in time, this can occur. This is connected with my section 23, which deals with remission. Remission means no need to pay any customs duty. Or alternatively, my customs duty is paid where I claim a refund of that duty. I repeat my point. Remission refers to necessity where duty need not be paid, or a scenario where I can claim a refund for duty already paid, if any. Ashok, there is one student who has reported this, her number. Please speak to her personally and get that issue resolved now. All these provisions I've explained. I'll just skip for want of time. Now, this is one slide. I just made a contradiction summary. What do you mean by pilferage? What do you mean by loss or damage? Pilferage, it's a petty theft. Loss or damage, it's a big loss. Means goods have been lost forever. Goods have been lost forever. Duty on goods, importer shall not be liable. Duty shall be remitted, duty paid will be remitted back to the importer. So either I can pay or choose not to pay. Subsequent restoration, in case of petty theft, if the goods are restored back, the importer is liable to pay. Out of 12 bottles, 1 bottle is restored back. I cannot say it is not by bottle. I have to pay the customs duty. Restoration in case of 23, highly impossible. When there is an accident, when there is a natural calamity, how can the goods can be restored back? It is not possible. Examination, differentiate between pilferage and loss or damage under section 23. 4 marks theory question, differentiation can be expected. Warehouse goods. Now, in case of pilferage, it's not applicable. For loss or damage, even that can happen in a warehouse. Owners to prove, it is not required under section 13. Reason, when you look at this package, it's a petty theft, apparently available. In case of section 23, the concerned importer has to prove to the satisfaction of AC or DC. Point of occurrence, in case of pilferage, it is occurring after unloading, before the officer made an order. In case of the section 23, goods must have been lost or destroyed before clearance for home consumption. That is, before even inspection, the goods have been cleared before passing order, this damage has taken place. Next, abatement. I'll explain in short this provision and I'll touch upon in detail. Abatement deals with the damage of goods. This damage of goods could be minor or could be major. Means the contracts between section 22 and section 23. Abatement is dealt in section 22. In case of section 23, goods have completely been damaged. In case of section 22, there was a minor damage. For a moment, say there is a motor car. Motor car, when it is being unloaded, there was a minor dent while unloading, or say there is a mirror which got broken. These are all petty damages. So here, resale value we call, or market value, will be lesser than original value. For instance, you imagine this car. When you want to buy a car, assuming there is a scratch or there is a dent to a car, a brand new car, you are doing a puja. Out of curiosity, you have to break your coconut. You have broken coconut on the car. This coconut went and fell on windshield. The glass was broken. So what happens there? Assuming 10 lakhs is a open market value, because the dent happened or some damage happened, the resale value comes down some portion. That's the case where section 22 abatement comes into picture, where the loss is that step 1, compute original duty. Step 2, compute the value after damage. For this, the officer will either go for auction, public auction, or he will seek from the open market. Step 3. Step 1 into value as per step 2 divided by original value. Now, for a moment, say original value is 10 lakhs. Say the rate of duty, customs duty, is at the rate of 12%. It happens to be, say, 1,20,000. 10 lakhs is the original value. Customs duty happens to be, say, 12%, 1,20,000. After damage, as per step 2, in the public auction, the value of car is available for sale only for 6 lakhs. Someone has come forward for public auction to buy that car at 6 lakhs. So the value payable as per section 22 shall be 1,20,000 into 6 lakh divided by 10 lakh. That means I'm reducing 60%, 1,20,000 into 60%. That happens to be 72,000. So the duty payable under section 22 after abatement shall be 72,000. This is what the customs duty says when you talk about levy under section 12. So section 12, normally I'm supposed to pay 1,20,000. Because I could prove to the satisfaction officer that there is a damage, I have to pay after abatement 72,000. Let me know if you have any doubts in this provisions under section 22. Why the class has become silent all of a sudden? Till 8 o'clock, people have been bashing questions left and right. All of a sudden, when we started discussing the problems, no, everyone is in a silent mode. Hope it's clear, you're understanding, or you have doubts where you're not able to understand. Silence, I take it for granted that you're understanding. If you have doubts, please post it to me. I'll clarify once again. Or I'll take it this way. There is a problem with your Board of Studies app. That could be the reason where you're not posting your questions in the question window. Done. Let's continue with our discussion. Section 22, I have explained. Now, this is one general rule called section 24, something to do with your denaturing. Denaturing. I gave example of this ethyl alcohol when I was talking about assessment definition. If you recollect, in assessment definition, I have referred to the last definition, special instructions, right? The special instructions or special provisions where this section 24 comes into picture when I talk about assessment. At the request of the owner, this provision says that at the request of owner, that is importer, denaturing or mutilation of imported goods. Denaturing or mutilation. Denaturing or mutilation. Example. Say this sugar. Now, when I say sugar, you could have that narcotic drugs, you have normal sugar. If at all, if I have imported a sugar, which is a substance of narcotic drugs. Now, you can imagine the impact of these narcotic drugs, which generally it's called as a Schedule H drugs. Means, with the prior permission of the drug control inspector, the drug should be purchased in any of the medical store. So these drugs, which are generally, which are called Schedule H drugs, if any manufacturer, the pharmaceutical industry imports any of those components, there is a process called denaturing or mutilation. That means to say, this customs officer, makes these goods unfit for one or more of such purposes. That means to say, the customs officer, with the request of this importer, makes a process of denaturing or mutilation, which can be used only for that industrial purpose, not otherwise. Like example, the sugar, narcotic drugs, which if I use it in open market, it becomes like anesthesia, which is used in the other side of the world. Similarly, the alcohol, ethyl alcohol. I was talking example of this 3-in-1 agarbatti cycle brand, where they use it as a incendic stick manufacture. So if I use an aroma manufacture, I can request the customs officer to mutilate, to say that it is used only for industrial purpose, not to be used otherwise. These provisions are covered under Section 24. So generally what we will do, I file an application. I say these are the goods which are imported. This can be used for purpose A. This could be used for purpose B. I want to use it for purpose A. Please do this activity in your presence so that it can not be rendered for usage of purpose B. This is a process called denaturing or mutilation of goods. Next, very, very important provision, Section 25. Students, we are 8:53. I'll go on maybe beyond 9 o'clock. Please bear with me. Let's finish this exemption provisions. Exemption provisions. Now, I was referring to this interpretation of statutes, where how exemption notification has to be read. What is the purpose of an exemption notification is covered under Section 25. Now, exemption under Section 25, it says, what it says, central government is satisfied for the public interest. So to do, what they do, they give an exemption notification in an official gazette. They give an official notification in an official gazette. For what? To exempt absolutely or conditional exemption. So they give a exemption notification which is either absolute, that means free of any conditions, or subject to conditions, subject to some conditions. That could be a way a notification will be given. Now questions comes here. When I talk about official gazette, so what if the notification, let me just write. So notification number is dated 10th January 2022, but it has come in public domain on 12th January 2022. What is the effective date or effective application? Effective application shall be the date of official gazette, that is 10th January shall prevail. The notification which is there as per official gazette, 10th January shall be prevailing over which is made in public domain. This is the importance of your exemption notification. Now, there could be scenarios where instead of a exemption notification in general, there could be a reference to something called special order. By way of a special order, in each case, there could be an exemption given for payment of duty. What are the examples of special order? Defense, or your police, or research and development like ISRO. There could be notifications which are passed by way of a special order, considering the need of the industry. Like Mansi was asking this question. So what happens between when there is exceptional nature, like the war between Ukraine and Russia, where there is an emergency, by a special order to a specific person. In these cases, when 18th of this month, say 25th of next month, some date will be there within which these notifications have a validity. Next, 2A. Now, this is one of the finest provision which will help even in the GST also. Now, Section 2A says that where the government feels it is necessary, it is urgent, so to do, to clarify the scope of applicability. That means explanation. I'll give an example to understand this provision. Most of you would have read section 16, which deals with your input tax credit. Under section 16, subsection 2, which deals with receipt of goods. Input tax can be taken only on receipt of goods. Now, if you read this section 16 carefully, after subsection 2, there was an explanation inserted in year 2018 where they have clarified. How do you read this provision called receipt of goods? Like example, bill to, ship to. Praveen in Bangalore billed goods to Shivam, shipped goods to, say, Mansa in Kerala. Now, I repeat the question again. Praveen in Bangalore as a supplier billed the goods to Shivam, who is there in Mumbai, and shipped the goods to, say, Mansi in Kerala. Now, the goods never received by Shivam. Now, when I read strictly section 16.2, it says receipt of goods. How do I say that? When Mansi has received the goods, Shivam, it's deemed that Shivam also has received the goods in case of bill to ship to. So there, the government feels it is necessary, it is urgent. Why? To clarify the scope or applicability. Now, when I say applicability, receipt of goods may also mean that a buyer, a third party received on behalf of the main party. So this explanation inserted in 16.2 made clarity that it is deemed that if the goods are received by any other person on behalf of that person, so if Shivam has given instruction to Mansi to receive goods, it is deemed that when the day Mansi received, it is deemed that even Shivam has received the goods. That's the power of explanation. So here they say that by virtue of this section 2A, any notification issued under section 1, any special order which is passed under subsection 2 can have the insertion of explanation. Insertion of explanation. So when I have to insert this explanation, what they say, these notifications will be, these explanations will be inserted within 1 year of issue of such notification. That means to say, when GST laws come in 2017, before the 2018 expiry of 1 year, explanation was inserted in section 16 subsection 2. So always whenever explanation is inserted, this is duly taken care that within 1 year of that notification under subsection 1 or order under subsection 2 will be inserted. And once it is inserted, it is deemed that it is part of the original notification. Retrospective effect. Retrospective effect. Like this example, when I was talking about section 16 subsection 2 with respect to receipt of goods. So they say that whenever I receive goods, now assuming say July 2018, this explanation has been inserted. It will be read as if this is effective from, this will be made effective from 1st July 2017. Why? Section 16 came into effect from July 17. So whenever explanation is inserted, it is deemed that the day the original notification has come, the explanation made the meaning effective from that particular date. Moving further, generally whenever a notification is given, they refer, this is applicable on the basis of a unit of measurement. Length, mass, capacity, quantity, liters. So whichever form they wanted to give, that form, these exemption notifications are given. Now, you remember I was giving example, 10th January, this notification was dated, 12th January, it was made in the public domain. What is the date of its issue? They say that publication in official gazette. That means the day the notification was dated, unless otherwise specified. Now, very, very important. Now, whenever you read a exemption notification, please look at the date of its issue. When you read the body of, when you read the content, if specifically a date is referred for its operation, then the content where they have given a specific date, this will prevail. So what if this date is missing? Then the day when this exemption notification is given, that is the day from when this exemption is applicable. This is the importance of section 25, subsection 4. Students, please wait for another 10 minutes. We'll finish today's discussion. Let me see if there are any doubts so far. Shivam says unconventional provisions, so it is taking time to digest. I am making it very, very lucid and simple for understanding, Shiva. I understand that most of students doesn't have exposure. That's why I'm making it slow and practical examples. Now, as I say, life of this exemption, life of a notification. They say that generally 2 years is the life of a notification. Now, whenever a notification is given, by default, they'll mention this notification is valid up to 31st March, that is 2 years from the end of the, like assuming, say, Jan 2013, a notification is given. So 2 years from here will be Jan 2015. This 2015 ends on 31st March 2015. So generally, any exemption notifications under customs will have this validity, which are issued under subsection 1 of this time limit called 31st March 2015. Now, I expect 1 2 marks question from your examination based on this section 4A, subsection 4A. May 2023, please wait and watch for because this is a recent amendment happened in 2022. Wait and watch for 1 2 marks question on applicability or life of a exemption notification issued under subsection 1. So here the notification says that 2 years is the time limit, which is valid up to 31st March of the respective year. So in this case, if Jan 2013 a notification is issued, this will have a validity till January 2015, which is ending on March, that is 31st March 2015. That's the time limit when the power under subsection 1 gets over. If you ask, sir, why this logic, why this particular time limit was brought in? Reason, many notifications are there. Now, if you look at the notifications, there are hundreds of notifications where government itself is not having a track the way industry is going through. For that reason, even if some reason they forget to seed a notification, this subsection 4A is going to put into all these notifications. Until unless they revive, this is going to be the end of a notification. And very well, they are connected with 31st March because April to March is going to be the financial year. All these notifications are going to come to an end ipso facto by default. Now, these are a certain general theory. So why notifications are given for granting an exemption? Now here, the reasons for that, because the goods never hit Indian soil, or it have hit the Indian soil, but it is not available for consumption. One of the example, warehouse provisions, or goods are damaged. When goods are damaged, why should I levy a customs duty when the goods are not enjoyed altogether? Alternatively, for economical benefits, this exemption notifications are brought in a macro perspective. Now, general principles, public interest is the main focus why a exemption notification is brought out. Like Mansam is asking one question, when there is a war happening between two nations, is there an emergency when these notifications are carved out? Answer is a big yes. Whenever the government feels that in the public interest, like COVID, all this oxygen cylinder, concentrator, PPE kits, drugs, they have reduced in the public interest. And so can I challenge under Article 14? Now, when you're reading the Constitution, Article 14 deals with your freedom of business. Can someone question the government why this freedom of business is not being permitted to one industry and not to another industry. Like example, rubber and coil. Rubber and coil are given more advantages in terms of concessional rate of tax. Can a person who is into the business under section, no, in steel industry challenge under Article 14 saying that you're giving benefits only to one set of industry, not to this industry? Answer is a big no. Reason, government has a power to frame. It's a policy matter. So you cannot question why is that you're giving only to one particular industry. Last but not least, time-bound notifications can be withdrawn. When the time-bound notifications are withdrawn, principle of promissory estoppel, that means I imported, you have given time limit of 3 months, but before expiry of 3 months, you have withdrawn this exemption notification. Now, this is where the principle of promissory estoppel comes overrides a policy matter. I explain this. For a moment, the government has come with a exemption notification for say 6 months, saying that any Schedule H drugs, I give a concession rate. Now, government felt that there's a lot of misuse happening in this particular pharmaceutical industry because I have given 6 months. Now, government decides that 6 months, after 1 month, they decide that to withdraw. So when government has withdrawn this particular exemption notification, can someone challenge on the basis of principles of promissory estoppel, saying that, look, you promised for 6 months, I placed an order. After the consignment started from there, you have withdrawn your exemption notification. Again, the constitutional right under this customs provision says that I can override customs promissory estoppel in determining whether I have to give you a benefit of this exemption or not to give. This is the last line. Delegated or conditional legislation. I can give this provisions on the basis of conditional or delegated provisions. And keeping in the interest of revenue, I can either give a concession, not to give a concession. And discriminatory, it is not based on MSME, it is always on the basis of a policy matter. Choice of date of exemption notification can never be questioned when it comes to policy matters. Now, these 2 slides, students, like one of student was asking this question. So can you guide where we can read this list of judgments? Mansa was asking this question, where I'm telling that these are the conclusions of various Supreme Court judgments where government has kept in mind how to formulate this exemption notifications under Section 25. Last question, Shivam was asking this question. If there was a substitution of any particular provision through a Finance Act, then if any explanation is inserted that substituted section within 1 year of the Finance Act, or it will be considered from the section originally came into Act. Now, for the benefit of other students, I'll repeat this question carefully. Shivam is asking this question. Sir, what if in the budget, like the budget 2023, what happened? The Finance Act has made a reference to a particular section where they have substituted a section. They have amended a section. After amending the section, in another Finance Act, explanation was inserted. So when an explanation was inserted, will it be effective from the original provision or the amended provision? Answer to this question, Shivam, whenever there was an amendment made, from the day when the explanation was inserted, it will be applicable from the day the amendment happened to the provision, not from the original provision. Like example, when we talk about supply under Section 7, there was an amendment made to Section 1 where this principle of mutuality was amended. And they have very well said this is effective from 1st July 2017, retrospective effects. Until otherwise specified, where parliamentary approval is given. By virtue of Section 25, this explanation will be having a effect only from the original provision. So this is the answer to your question, Shiva. No one can refer to a finance minister speech and say referring to finance minister budget, exemption has to be given. By mistake, if there is a typographical error or reading error, one cannot claim that this is a way I will claim an exemption. Unless a notification has come, I cannot claim a benefit of a exemption notification. And when 2-3 notifications are there, when multiple notifications are there, assessee can choose which notification you want to enjoy. The revenue department cannot say, choose this notification over that notification. So always the benefit of choosing is prevailing with the assessee. Students have given a couple of MCQs for paucity of time. Next class when we start, I'll first cover up MCQs and then we will start with the next topic. Till then, see you all. Good night. Goodbye.
Recording stopped.
Ashok? This issue, एक लड़की ने नाम क्या था, कौशिकी, उन्होंने बात हो पाया उनसे? अच्छा, एक बार ऑफलाइन चेक कर लेंगे कि क्या इश्यू हो रहा है. बोल रहे थे कि आपका ये स्टोर, हमारा बोर्ड ऑफ स्टडीज का ये पोर्टल काम नहीं कर रहा है बोल के. इग्नोर कर सकते हैं या कैसे? हाँ, रिफ्रेश करने के बाद प्रॉब्लम आ रही है बोल रही थी. खत्म हो गए ना? ठीक है, तो आज के लिए क्लास खत्म हो गया. ठीक है, थैंक यू, बाय, गुड नाइट.